Hey there guys, and welcome back to Alex Invest. And oh my god, the markets are red today again. And even though we have such a red market, I'm not too worried. We're going to go through sort of my watch list here and some of the other things and just see how red we're doing. But then I also want to go through NSH and their investor presentation and why I think this stock is kind of set for growth, and also why it's a good investment right now because there's not very much downside potential left in this SPAC. So let's go through all of that. But first, again, we'll just look at sort of my watch list here. And as we can see, everything's red. Fuel cell energy, I did not think we would go below $15. And here we are at $14.60, guys. Incredible. I owned this one already back when it was $1.8 a share. So I'm still quite a bit up on it, but my God, guys, it is insane here. Red just basically across the board. Tesla had some nice recovery though as well today earlier. We were down at $627 here. What a buy, and we're coming back down to it there again, right? We had a little bit of recovery and we're coming back down, but Brewbuilt as well, up today quite a lot, 50%, right? And the reason for that is they announced a new $125 million facility, which is great. I knew there had to be a reason why they were issuing more shares, and this is the reason. They have this new facility coming out. Do a separate video on that, but I just wanted to go through why we're seeing a big jump here today. And I don't really see us coming back down here now again because of that news of the new facility there, right? Where before, we had the jump up to 2 cents, but there wasn't really any news backing that. Whereas here now we do have a little bit of news backing that. And of course we came back down because of that share offering, right, that they said. But anyway, so that's that. And yeah, the rest of the market is really green here. This is NSH. This is what I want to talk to you guys about today, right? Navsight Holdings merging with Spire, and it's essentially a space and satellite stock here. And I think they're going to do very, very well. And again, there's little downside left for this one. I calculated the net asset value at around the $9.8 per share level, and we're at sort of 10.25. So again, little downside, but I think there's some big upside potential for them because they've already have revenues, right? They already have about 100 satellites up in the sky. And I think since they do things faster and more efficiently than anyone else in this sector right now, I think this SPAC, it's merging with Spire. And so, yeah, I do see some big upside potential there. And other than that, yeah, markets are red today, guys. Churchill Capital, up a little bit, but still we're at $24. I bought this one at $30 and $35 a share. So yes, I am down on it, but hey, that is life right now in the red market. Oxy Petroleum though, doing very well. So that's nice. But yeah, other than that, rest of the market is just down again. When will it end, guys? I do not know, but yeah, again, not too worried about it. So yeah, anyways, let's get into the NSH investor presentation here, and I'm just going to pull that up for you guys right here. So here it is, and we're going to start on this slide right here as well. So we're not going to go through everything here, right? We're just going to go through some of the main points. You can always look this up yourselves. If you just type in Spire investor presentation NSH, it should come up. And yeah, there's going to be a lot of slides that I'm going to miss out on here, but I just want to go through some of the main talking points that I have for you guys. And this is where we're going to start here. The illustrative pro forma ownership is where we're going to kind of look at here, because what we can see is that the SPAC stockholders, which is us, right, owning NSH, is about 14%. So once we see the merger, we'll have about 14% ownership in Spire. The PIPE investors, and that's the private investment in public equity offering they're doing, which essentially means that there's investors coming in a private setting, and they'll get 15% there as well, right? Because they're giving about 220 million. Which is about the same as this SPAC is giving, about 200 million or so, or 220 as well. Total addressable market here for Spire as well is nice, growing at about 8% compound annual growth rate a year here. 66 billion to 91 billion. And here, this is important to go over. We can see some of the main industries they're in here: maritime, aviation, weather, and orbital services. And these right down here are also some of their target industries. And there's a lot of them, yes. And, oftentimes it's kind of hard to get into so many different spaces. as one company, you kind of want to focus in on a few main industries, but that's where they have maritime, aviation, weather, and orbital services. And then some of these just kind of come naturally from that because of all the satellites they have in the atmosphere, right? Again, they already have about 100 satellites out in space, and they're trying to cover the entire Earth so they can constantly monitor every single space at once. Because right now, with the satellites out there, what happens is obviously they rotate around the Earth, and the Earth rotates as well. So you can't really access a single point constantly. But when you have, 100 satellites, 200 satellites out in the atmosphere at one time, that you can monitor every single area, because although those satellites are rotating around, there's so many of them that you can see every kind of aspect of the Earth at once there. And that's why I think the government defense specifically is going to be a big one for them as well. And they do mention this space quite a bit in some of their reports, etc. So I think, and they already have quite a few partnerships with governments to be able to monitor defense, etc. Right? And they say the same thing for weather though here with all those satellites, right? Since they can monitor all these different spots, weather is going to be a very large application for that. But pretty much all these will be. So and that's good stuff there. And here we can kind of see where they're going with all this and what they're trying to achieve, which is they collect the data, right, from their satellites to the ground. And from that, they again then process that data, which is all automated, all automatic here. And then from there, again, they give that to their customers. It's kind of a one-stop shop here, which is nice because you don't need any other companies involved here. It's just one partnership with Spire, and then the company basically gets everything from Spire. Software as a service, space as a service, and all this coming from just Spire here. And again, this is kind of what I was talking about here, right? Where they have multiple satellites out in the atmosphere or out in space, and they're able to kind of monitor every single area. We can see these kind of connections here, these lines, right, where different satellites will go around the Earth, and then you basically can monitor every single area at once there constantly, right? It's essentially 24/7 monitoring of the entire Earth here, which is a very, very growing business. Like we saw earlier, we have that 8% compound annual growth rate, and sure, that's the total addressable market, but I think Spire is going to be able to take a lot of that market share because of the way they're doing things and because of their quick, accessible manner in which they kind of operate here. And we can see part of that is right here, where they kind of have this 3 to 6 month design to launch phase, where a lot of these other companies in maritime, aviation, weather, orbital services have this greater than 12-month time frame, which obviously is much longer than 3 to 6 months there. And here we can see, this box is what's important. This is kind of what I was saying here just a second ago, where they believe they are the only player collecting all 3 data sets globally and simultaneously to combine them into its products. Legacy satellite development, 3 to 5 years. Spire, we're looking at 6 to 12 months. Again, that's going to be a big differentiator there. And it's going to mean that Spire is going to be able to take a lot of that market share from some of these other companies. And the cost is very important here, because usually satellites are about 10 million plus, but as Spire does it with kind of this monthly subscription service to their satellites and to their data sets and their technology here, it's about $30,000 per month. And again, cost, since it's such an important aspect here, having it so much lower and being able to, again, have it on a monthly basis on kind of a subscription-based service here is going to really give access to a lot of other companies that wouldn't have otherwise been able to get this access of this technology. And so that's going to be a big differentiation there. And we can see some of their customers here already, massive customers, right? Herein, Supersonic, I'm sure a lot of you guys have heard about. And obviously NASA, everyone has heard about. And, Obiter as well is a very big company in this space for orbital services there. And we can just kind of see all the different sectors they can get into, again, with these 4 being the main ones. But like we saw earlier, there's so many other applications for this industry. and some of the blue chip customers, we saw Obiter, Herein, Supersonic, NASA there, and all these other ones, which are massive companies already, and they're going to be able to get a lot of revenue from these guys because they are already big companies, right? Chevron here as well, and all these others. So good things happening there. Accounting rate of return here per product per customer, again, is going to grow here by about 11% compound annual growth rate. We have about 150 plus product customers, and those are in about 30 countries. Really, really good things there. And then I wanted to show you guys this slide here. This is important because we can see we'll start here, free cash flow and FCF conversion here, percent is we're going to see profitability by 2023. And of course that's an estimate, but that's when they kind of hit their free cash flow conversion of 62%. And we see the year after in 2024, we're already at 84% here. And again, $166 million in free cash flow. So really by 2023, we're expecting a much, much higher price. And who knows, we could hit it in 2022 as well. But once all of this is operational and functional, there isn't much kind of capital requirements needed to continue, right? Not much CapEx needed. And they're projecting that we'll already have a 63% gross margin in 2020 here, and moving forward it's just going to keep growing and growing. By 2025 we're already at 830 million in gross profit, right? That's not revenues, this is gross profit. So that's really impressive, I think. And again, that 91% gross margin, much higher, or percentage wise, sorry, much higher than a lot of companies are able to achieve, especially this quickly over just a few years here. And we can see just the exponential growth in their revenues here as well, just because this space is also growing so much here, and continually grows. 2025 estimates are over $1 billion here. So really good stuff. And we can kind of just see we're almost doubling our revenues from 2024 to 2025 here. Again, only estimates, right? But really good stuff here. We can see even here, 2020 to 2021, we're going to double. And just because of the stock price is so low right now, and I don't really see us going much lower. Again, it's safe. It's a safe play kind of right now as the markets are so red here. And here, this is kind of what I was saying earlier with the CapEx. We're at 159% back in 2018, and the CapEx is just getting lower and lower as, you know, we see here limited additional CapEx requirements. Once we have these satellites out in space, there's much less CapEx required. And we can see us continually moving down. In 2021, we're at 10% here. In 2022, 12%, but from there on, we kind of go down 5%, 3%, 3%, and our accounting rate of return as that happens is just getting exponentially higher. And that's really going to do it from me today, guys. That's pretty much all I have for you guys. I hope you guys like NSH. Again, I'm invested in NSH because I don't think they have much more downside left, and it's pretty much all upside from here. I think they could easily go to $20 or more here in the next couple of months. Obviously the SPAC market is doing horribly right now, and that's why it's a great time to get into this stock, right? And that's the thing. When everyone's worried and things are down, that's when you want to buy, not when everything's high. You want to buy when everything's low, which is right now. So little downside potential, big upside potential, and that's why I bought into this one. A safer play, yes, keep that in mind. We're not going to see 300-400% gains. We could, but it's unlikely that we're going to see that too soon into the future. But we will see that once we kind of hit that 2025 mark there. So yeah, that's going to do it for the video today. I hope you guys liked it. If you did, please like, subscribe, and leave me a comment as always. And other than that, I hope you guys have a fantastic day, and I'll see you guys tomorrow.